Hello and welcome to this week's plan review. My name is Brian Williams from Northshire Consulting. Today we're going to talk about the Fidelity Series Emerging Markets Opportunities Fund. We'll talk about the fees and expenses. We're going to talk about what exactly is an emerging market or an emerging markets fund. We'll get into comparisons on performance against the category and the index, and we'll talk about where to use these type of funds in your portfolio. How we got here is this. Each Tuesday in our Facebook group, 401k and beyond, we pick one Morningstar category, and then we pick the 10 largest funds in that category. We put a poll up and we let the members of the group decide on which fund they'd like to see a more in-depth review of. So this is the fund they selected for the week. Thanks everybody for voting. And we had a few people send in some questions ahead of time, so I'll be sure to touch on those later on. We have to start with what exactly is an emerging market or an emerging markets fund. So you'll see emerging market stock funds and emerging market bond funds. They're both focusing on countries like China, Taiwan, India, Brazil. Those are countries that are considered to be emerging. The other side of that is developed or developing markets. So when you put those two together, that encompasses the whole international stock market. This fund here plays mostly in the large cap and some in the mid cap space. So you can tell by the style box there, a mix of value and growth that puts that right in the middle. So it's considered a large blend in that diversified emerging markets category and follows the MSCI Emerging Markets Index. A reminder that this video provides general education. Nothing shared in this video or the Facebook group is to be considered specific tax, legal, or investment advice. Certainly don't act on any information in this video or the group without first consulting your tax, legal, or investment advisor. We are an independent advisory firm with no affiliation to the reviewed fund, and we may or may not have a position in this fund with client assets. So how do you get a position in this fund? So that's one of the most important things, we need to touch on for this video. It's not available for individual purposes, as it says right there on the Fidelity website. So it's designed to be an underlying investment in the Fidelity Freedom Funds, which are the target date funds, and in certain asset management programs. You would have a portion of this fund if you're part of a Fidelity advisory program. So that part I think is important, that it's part of the Freedom series in the Fidelity Active Managed Target Date Fund. So those target date funds, the way they break down is they have a little bit more in the emerging markets than their peers. So when you look at specifically the Asia piece, the Fidelity Target Date Funds, and for this example here, we picked the 2045 vintage. So that's designed to be for people who are going to retire right around that 2045 mark. So, about 25 years away. So you figure those people are about 40 years old now. So in this particular fund and throughout the Fidelity Freedom Funds, they're going to have a little bit more in emerging markets than their peer group. So the way that factors here is money that's flowing into those Fidelity Freedom Funds are in turn going to push money into this fund. That's probably part of the reason that it's one of the largest emerging market funds as far as assets go. So this fund's been around for 13 years. It's got a good asset size here at 32 billion, 250 holdings. That's a pretty good number for an emerging markets fund, but we'll see later on they've got a pretty good portion in their top 10 holdings. It does have a bit of a team approach here. Sam Polyak's been there for 11 years now, but they had a couple recent additions. So let's talk about that. So here we go, taking a look at the fund managers. Late last year, they added a couple fund managers. You can see here on the bottom, Jane Wu is somebody who's written some of the commentary in your annual report. So you'll see that name pop up quite a bit. But there's an experienced team, again, without really that star manager approach. If somebody were to leave the firm or something else to happen, they do have a deep bench here of managers who could step up. And you see they, as we said here, they added a couple last year. As you'd expect, obviously, with an emerging markets fund, they're going to be primarily invested in non-U.S. equity. You see the cash position here at 2.7. So that's as we've talked about before, to fund redemptions. And so when money flows into the fund, also it gets invested in cash until the managers find some opportunities. This is not a fund who will play around with that cash position. You won't see it, jump up to 20% because they're making a market call like that. This is a fund that's designed to be invested. It's not a fund that's designed to avoid market meltdowns or anything like that. So that's been pretty consistent over the last few years. They've been, 96, 97, 98% invested recently. So when you look at their top 10 holdings here, what you have is a pretty significant weighting for, in my opinion, the emerging markets fund. So Taiwan Semiconductor is 77% of the portfolio, with Tencent in at a little over 6%. So those two stocks make up a good portion of the portfolio. Next couple positions coming in at around 5. So for an emerging markets fund, this is certainly not a fund you'd consider concentrated, but it's fairly concentrated as far as the top 10 holdings go. The expense ratio here, 1 basis point. Yes, that's right. So for every $1,000 you have invested, you're paying 10 cents at a management fee. But understand, remember what this fund is designed to do. It's designed to be part of a Fidelity asset management program where they're charging a fee on top of that, or part of a Fidelity target date fund series where there's other fees involved there. So this isn't a fund that's specifically designed to drive revenue for Fidelity or anything like that. It's designed to be a component of other portfolios. The diversified emerging markets category as a whole is a fairly expensive category. So sometimes people look at that and they decide not to invest in emerging markets, or they pick an index fund there because it looks so much cheaper than the category average. So that's important, because if you're missing out on this category, you might be missing out on a key asset class in your portfolio. One of the things you look at with your target date funds is not just how they're put together, but how that works with outside assets. So let's say, for example, you were using Fidelity target date funds in your workplace and you had that significant slug there that was in emerging markets. You may not want to invest in emerging markets with IRA money on the outside, because then you might be overweight and taking on a little bit more risk overall in your portfolio than where you want to be. So it's important to look under your hood of the target date funds, look inside some of your asset allocation funds. You notice the Vanguard target date funds have about half as much in emerging market stocks as the Fidelity fund. So there is no set allocation that target date funds are required to have for specific asset classes or categories. So again, that's why we always want to look at our holdings across the board and make sure that we're not taking on too much or too little risk. When you compare this to the category, obviously it's done very well, as you can see here, outperforming the category 9 out of the last 10 years. And really their only, mishap, if you will, was 2011, when the category as a whole was down 19% and they were down 22. So not that big of a deal here. They have, it is an actively managed fund, and they have outperformed quite a bit over the last 10 years. When you're comparing it to the category, remember, that's a category that on average is charging over 1% a year. And this fund is in at 1 basis point. So just by getting basically what amounts to 1% head start, that's going to help them a lot of years against the category. So we always remind everybody to get information directly from the source. Fidelity's got a good website. We don't know when you're going to be watching this video on YouTube, as it kind of hangs out there. So Fidelity's a great resource to get up-to-date information on your holdings. Remember, mutual funds are a little bit different than ETFs. ETFs report their holdings in an ongoing basis. On a daily basis, you can see what they own. Whereas mutual funds, there's a lag on that. So you don't necessarily know what the portfolio is the day that you purchase it. So that's something to think about as you're reviewing your holdings. Also, Morningstar.com is a great resource to look up funds like this, see what they're holding, and compare it to some of their peer groups. This fund is being reviewed based on the recommendation of 401k and beyond. So if you're watching this on YouTube, again, be sure to check out that Facebook group. When you compare this to the index, the fund doesn't do as well against the index as it's done against the category. And that makes sense, right? An index doesn't charge an expense. And basically at 1%, the Fidelity Emerging Markets Fund isn't really charging a fee either, so to speak. So it's a more level playing field, whereas the category has to deal with that expense ratio. So here they've outperformed 7 out of the last 10 years, 3 out of the last 5. And again, even the years where they underperformed a little bit, I mean, you look at 2013, geez, nobody's going to complain about their fund being up 34% if the index, even though the index was up 38%. So not that big of a deal there in the 3 years that they slipped up a little bit, if you will. So overall, I give this fund a B plus, firm grade. We like Fidelity. We like a lot of the things that they do here. This is a little weird one to grade because you can't just go out and buy this fund. Be nice if you could go out and grab this fund at 1 basis point, but you can't do that. So it's a little bit tough to grade. The risk grade, we give a B plus because of the volatility of some of the holdings inside of the fund. The return grade, hey, we give an A minus. They do very well against their category. Part of that's the expense, as we talked about, and they do very well against the index. So overall, we give it a B plus.